to the angle, no time to delay. Markets rise and markets fall. Atomcash is ready to answer the call, while the bulls charge hard and the bears dig deep. The angle will keep you on your feet. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Cashing in on the highs and lows, where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everybody, and welcome to the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Atomcash, and I'm bringing you the firepower your financial life's been missing. No fluff, no filler, just pure velocity. And whether you're new to trading or a trading savant, I aim to turn complexity into clarity with a shot of adrenaline. Now today we have a thunderous lineup of segments for you all to give you as much information as quickly as possible as we aim to do on this show. So starting early, market's going to open in about 12 minutes here. We're going to have an open discussion, perhaps some live trading, and some general market analysis through about 10 o'clock, mainly looking at the SPY and overall markets, news, etc. Around 10:15, we're going to move into something what I like to call options operations. So typically it's something where you guys in the chat can actually suggest or ask questions of things that you have, whether it be from trading options or any risk questions that we'll answer live for you guys right here on the show. And lastly, I've got a little gem for you. I'm calling this section dumpster diving because it's a spin off my raccoon idea trades. And if you've been following me for a while, you understand what that is. But for those of you that may be new, essentially what it is me finding an undervalued company that you guys might actually like, presenting it to you in a bull case on why I think this company could be a gem in the rough, or already a bigger gem than it already is. So that's what we got for you today. Thank you for tuning in. If you're watching the stream right now, do me a quick favor, drop a like, drop a comment, share it out to your friends, etc. And yeah, let's get right into the show. So right now, looking at the market, SPY right now is at 529.63 in the pre-market. Like I said, we got about 10 minutes. Market opens here down a little bit on open on the week here. We had Trump say some comments over the weekend, so obviously that's going to play a little bit of a role in how the market is perceived at this point in time. Now, I did mention this to our members over exclusive trading this morning, but we see and we're noticing that the market's starting to care less and less about the tariffs, unless there is action like we visibly saw last week and the week prior. The fear going around with tariffs right now, obviously it's very prevalent. But every time there's a Trump tweet or whatever, the reaction's getting less and less and less aggressive. The market's getting used to there being this kind of volatility of, oh, will there be a tariff? Won't there be a tariff? And that's what we're starting to see more and more in the market, where the market's not caring as much. But that doesn't mean it doesn't care at all, obviously. So speculatively speaking, that's what we're seeing, why we're down about 1% here in the pre-market, which arguably, considering what we've been looking at recently, that's really not that big of a deal with the kind of volatility we've been seeing recently. Let's also take a peek at the VIX here, currently around 3220 so far. This week, what I'm looking for here is this 35.17, in my opinion, is a line in the sand there for a big volatility flip. So if we see VIX crack over that 35.17-ish area, you're more than likely going to see a big push in volatility, which could mean one of two things, depending on how the VVIX looks. Now, this is something I talked about if you caught the preview episode, which you can go, that's all on demand right now, whether you're on my YouTube or on X. You can watch that video where I break down VVIX and VIX and the relation to the market. But depending on where the VVIX is sitting, if we approach that area, that's something to keep an eye out for as well. A few things that we're going to keep an eye on. Obviously, today we want to watch the Qs, keep an eye on tech. If we're going to move over to our sectors here real quick, looking at our pre-market sectors, which you guys should be able to see on the screen. Right now, what you want to look out for is seeing who turns green, if a sector turns green, and who's red right now. Obviously, you're seeing tech right now down about 2%. Now, we do have some big ERs this week. We also have Tesla and Google are the two big ones I'm watching out for. Intel, another tech company, Boeing, American Airlines, some other companies you want to keep an eye on, which we can get into a little bit later in the show. But right now, you're going to want to watch tech very closely and obviously watch your QQQs for getting an idea of where the volatility is coming in today, specifically on like the NASDAQ or any sort of tech companies. Looking across other sectors here, obviously you're seeing a pretty even spread. What you don't want to see if you're a bull in this environment is you don't want to see consumer staples turn green, utilities turn green, or energy turn green, or the three of those combined, and all the other sectors are red. That's going to give you a hint that things could be moving risk off, especially with how volatility is sitting like we discussed earlier. So there's a few different things you want to keep an eye on here as we head into the open. Now I'm going to bring this back to where we were, and I want to take a peek at some news for you guys, so that way you guys are armed with what to look out for on the day today. Today, pretty light news day, all things considered. I know we have a lot of randomness that gets thrown into the market, so that could change as we go throughout the week, obviously with announcements of executive orders being signed or anything like that. But as it pertains specifically to today, really nothing major. You do have the 6-month bill, which could be something. Goolsbee speaking, or spoke, I'm sorry, at 8:30. At 10:30, this is very important, guys. Make sure you have this marked down while you're trading today. Trump at the White House will be doing its Easter egg roll. Extremely important. This is definitely going to decide the future of the market for the next month. So this is very important. The Trump White House Easter egg roll, critical to the market here. Keep an eye on that at 10:30. I just find it very funny. This is listed in my newsfeed. Outside of that, we really don't have much else going on today. Let's look forward to the week. That way you guys know what to look out for during the week. You have 3M earnings, GE tomorrow, Verizon, Lockheed Martin. Those are all going on tomorrow. You have some Fed speakers speaking tomorrow as well, with Jefferson and Harker. And on stateside until pre-market, where you have AT&T earnings. You might want to keep an eye on that. You do have 30-year mortgage rates, so that would be very important if you're someone who trades, obviously like home builders or anything like that. You want to keep an eye on that. That's at 7 a.m. More Fed speakers on Wednesday. Goolsbee, Waller, and then you have PMI flash. That could also be something you want to keep an eye on. All this stuff, guys, you can get through your broker typically. I personally like Financial Qs, not sponsored or anything, but I use them. They make it nice and easy. It's color coded for you guys. You can see like what might be a catalyst, what may not be. Beige book on Wednesday too could give you a little bit of a bump there. So something else you want to be conscientious of. Heading into Thursday, you have jobless claims, so obviously that will be something to keep an eye on. Merck and Procter & Gamble earnings, that's something I'll be keeping an eye on. With American Airlines in the morning. Existing home sales, again, in the tone of looking at the 30-year mortgage rate with the home sales, that could be something you definitely want to keep an eye on, give you an idea of how the housing market's behaving in this environment on Thursday. And then you have the 7-year as well as Google earnings after hours on Thursday, and Intel after hours on Thursday. Then wrapping out the week on Friday, we have one of my favorite trading catalysts, Michigan Sentiment at 10 a.m. For those of you in the community, you guys know I love to trade Michigan Sentiment. It's often overlooked by a lot of people for some reason. I love trading it, so keep an eye on that. That's 10 o'clock on Friday. But outside of that, pretty clean week. All things considered, from what we've been used to seeing, this week's not awful. It's okay in terms of the kind of news that we typically get from the market, or we have been getting from the market recently. So I'm pretty happy to see a calmer market than what we've been seeing recently, because it has not been too fun to trade these environments. I don't care how risk on, risk off you are, it's not necessarily the most fun to be involved in this environment. With that being said, we are 4 minutes into the open here. I'm sorry, 4 minutes until the open. Let me get the SPY back on the chart so you guys can see that live. Currently at 520.62. Let's take a look at some levels to look at before market opens here. So we're zooming out. This is the daily chart. And if you caught that little preview stream, I talked about the importance of this 531 area. Now, obviously, that's a far cry from where we are right now, currently trading in the 520s, but it's still an area to watch nevertheless. This 531.30, that's your 0.382 retracement level, but you do have a cluster of support and resistance here. So for me, what I'm looking at is this is the area that's like your bull bear zone. And depending on how volatility is trading, that can kind of give you an idea of which way we're leaning here in the near term. Now, also keep in mind, today and tomorrow are your first days of your May OPEX. So we just finished out the April OPEX, now we're moving into May OPEX. So typically your first 2 days of a new OPEX, you get an idea of positioning. Depending on how volume comes in, you get a better idea of which way the market could be leaning. Those specific levels to keep an eye on around that 531.30 range, you want to keep an eye. This first level, 529.38, that's the first level it's got to go to start it all before you get anywhere even remotely bullish, in my opinion. That being said, now that we're under this level, the other key level you want to watch is 523.54. That would be like your early cry of potentially there being any bullishness. And you can even see on that Thursday daily candle here, that top of that wick basically hit that 0.382 retracement, and look at that bottom of the wick, right around that LOI that I have, that level of interest, just shy of that. Coming up and closing above that. So the fact that we're going to open down here in this gap, we're going to be between two important levels of 518.50 and 523.54. So that's going to be the area you're going to want to keep an eye out on. Now, with that being said, we're more than likely, if we open down here, we're going to tilt a little bit more bearish on the day. But with that being said, I'm not going to get too aggressive into thinking that just yet. I want to see how volatility opens, the first 5 minutes or so go before I put my flag in the ground here of which way the market could be leaning today. We are almost to open here, 9:28. Looking like we're going to get a little bullishness into the open. So like I said, for today's show, we're going to be talking a little bit live trading during the open here. So probably if I do take a trade, which typically on a Monday, especially into an OPEX, I won't necessarily trade the open. But I'll at least give you guys levels to watch out for. If I do take a trade, I'll let you know, obviously. But we'll at least give you levels to watch out for, things to look for, and kind of give you an inkling of what to look for more into the week. We'll run that until about 10 a.m. We'll do a little bit of options operation, and then I'll get that gem to you guys that you might be interested in. One stock that actually was very active this weekend in terms of news, and one that I think could at least triple from its current evaluation. So if you like the idea of that, make sure you stay tuned to around 10:15-ish. That'll be there. And if for whatever reason you have to leave, you're busy, whatever, you can't come back, all of this will be on demand on my YouTube channel, and probably you can watch it back on X. I don't really know how that works, but it will definitely be on the YouTube channel and on Instagram if you're watching on Instagram, so you guys can rewatch the feed if in case you have to leave, you want to come back, you could do that. So before the market opens, if you haven't already, guys, please do me a favor. If you like the content you're seeing so far, drop me a quick like, a follow, subscribe, whatever platform you're on. Give me a little bit of interaction, helps me out greatly, lets me know that you're enjoying the content you're about to see. All right, market is open right now. Let's see, we got a little bit of a pop here into the open. Obviously, you're going to want to watch that red to green level of it, because since we're opening, we gap down technically. We'll see how we react there. Let's get something else going here. All right, keep an eye on the volume here as well. VIX currently at 32.22, up about 9%. Tapped that 32.75. VVIX is down. So what you don't want to see, if we continue this pattern here, if you're a bull, you don't want to see the VIX go up and VVIX go down, because VVIX is measuring how volatile volatility is, and VIX is measuring volatility. So if volatility is going up and VVIX is going down, that means we're going to be more volatile for longer, which typically does not favor bulls. Now remember, volatility and the market don't have a one-to-one relationship necessarily, but VIX is essentially your price disagreement, your price agreement, price disagreement. Do people agree on the price of what SPX is currently trading? And if we see them move opposite of each other, then that's some level of concern. But currently now they're both green, so we'll keep an eye on that. Let's see. It might end up being a pretty choppy day. Check the volume here. I would not rush this open. Let's look at the at the money IV. Currently at 48. So typically that's very high, just so you're aware. At the money 0-day IV on the SPY typically floats around 20%. However, in the last few weeks, we've seen it as high as 150%. So for the current environment, I will preface this by saying 48% is actually not awful. It's still not good, but it's not awful. And you can even see here, your IV percentile and your HV gives you an idea of how volatile IV is and how it is in comparison to the volatility of the underlying. And HV percentile seems to be, I don't know, I'm guessing it's at 100 and it's glitched. It's very high. It's up here, but it says 10, so that can't be right. And IV percentile right now is at 92. So we are very, very high with implied volatility in general. So especially on a Monday open on a brand new OPEX, you might want to take it a little bit careful if you're someone who trades 0-day options. So far, the spread on the market, just about $1. Nothing much to see here. Check on the Qs because we measured the importance of that. Technology starting to move to the upside a little bit here. So we'll keep an eye on our sectors real quick. Our red right now, tech kind of getting a little bit of a bump here, but leading the losers. Actually, I lied. Energy getting slammed at the open here, down 2% on your energy sector here. Consumer discretionary as well. So that's like your Tesla, big one in consumer discretionary, getting hammered as well. So looking like a pretty bearish open. You're going to want to watch this 520. I know it sounds silly, but sometimes these round psychological numbers mean a lot. What's our pre-market low? 519.26. I think if we break this 520, obviously you're going to get a pit stop around this 519.26. But it wouldn't shock me to tap this bottom line LOI 518.50. Otherwise, we're looking like, I think if we don't break that level, we're more than likely going to stay pretty range bound today based on this open. Thus far, volume is kind of low, actually. You're getting about 150K per 1 minute. Typically what I like to see, especially at the opens, over 300 to 400 to get a lot of volume pumping in. People are excited, especially on a Monday. So the volume's a little low for the open on a Monday of a new OPEX. So that's something else I don't necessarily like in terms of a risk. So anytime you hear me say I don't like something, it's not that I'm bullish or bearish. We look at things here on the Atomcash angle from a risk perspective. Is it risk on? Is it risk off? I will be a bull or bear any day. Depends on which way the wind blows. Depends on what makes the most sense in terms of risk. But is it a good time to put my and your money at risk? Currently, the answer is no. But we will see. Because right now this volume's a little too light for the open. IV is a little too high. Volatility is up. So that doesn't really put me, especially if I'm buying options, right? BTO options. Especially if I'm a options buyer, this is not a good environment to trade right at the open just yet. So we'll wait and see how we react to this 520 level. SPY breaking a new low of the day here at 520.10. I'm expecting the bulls to want to defend that 520 level. However, if they lose it, it will come down a little bit sharper. If I had to pick a side today, I would lean more bearish based on this open and based on where volatility is. Unless we can see the Qs. Unless the Qs can get some footing over 440, I would say. I would lean more bearish. If the Qs break this 437, though, it's going to drop too. So I would lean more bearish on the day before I would lean bullish on the day. And you can see right now as SPY's breaking a new low here, or testing a new low, that it's driven by tech. Tech tried to pump up the market here in the beginning, and even as tech tries to pump it up, the market's still coming down. So if tech can't get their legs together here, can't find its sea legs, and starts to pull lower, then you're going to see SPY break that 520 and push towards this 518.50 area. So what I will do, let's check out the IV on these 0 days. I will keep an eye on. Let's look at. I'll keep an eye on the 519 puts for today. I might miss the boat here, but that's okay. We'll keep an eye on these and see what happens here. Mainly, I'm looking at the Qs for confirmation here. And I'll make a judgment call on the fly in regards to that. So if you like that idea, if I do take that trade, I'm watching the 519 0 days right now. Let's see. And I also like to keep an eye on UVXY as a measure of volatility for a little bit longer term. UVXY takes, it's not just like regular VIX converted into options, it's 1x VIX, but for a rolling 30-day period. So it's a little bit different than spot VIX. It kind of gives you a little bit more longer term exposure. At least this is my summation. And obviously you get the options edge of it too. Be better idea. And it looks like I might have missed the boat on the 520 break. Probably won't happen. Let's see. If we backtest that 520, I'll consider getting in on a put play, but it doesn't look like I'm going to get that opportunity, unfortunately. Looks like we'll be tapping my 518.50 at this rate. What I'd like to see is us come back and retest that, what's the low? 520.10, 520.04. So if we tap basically, like I said, a little bit over 520, come down, retest, reject, that would be a good point to get in on a put play. We'll see here. All right. Right here. So let's see if this backtest holds. All right, I'm in on the 519 puts at 235 average. And we'll see what happens here. This is going to be different because I haven't live traded and traded. haven't live streamed and done a trade. This is the first alert we'll have. And that was at 235. And now I got to type this out for the people in our community. 235. Bada bada. I don't know why I can't alert. Okay. Weird. I can only tag myself. That's weird. All right. Down at 260. I'm going to take a trim here. All right. Trim that for 14%. At 268. If you're on a smaller account, you can obviously consider a stop loss at break even here. You want to take it super safe. If we see another wick, so right now you're seeing these two bottoming wicks here. So you're seeing bulls trying to come in. If I can move my mouse here, you're seeing bulls. So we had a wick lower, a little wick higher. If we don't break this low here, then we're more than likely gonna tap that 520 and push higher. So I'll actually put a stop loss on mine. Play it safe. If it cracks at 520, there could be a pushback to the upside. All right, I got stopped out. There you go, 14%, nice and quick. Not too bad. So now we're gonna wait, because now if we do push to the upside here, if we break over that 520 area, then it's gonna reverse back to the upside. We're gonna get in this mean reversion place where it's gonna play around and shop. Under 520 here on the day, it's more than likely gonna be bearish. You wanna keep an eye on the Qs here as well. That was actually really hard to trade here, type in the Discord and talk to you guys. So I got to figure out a better system if I'm doing live trading with live streaming at the same time. We'll work on that. It'll be a work in progress. Maybe I'll just have to do it all verbal. We'll see. But yeah, so I would not chase either direction here. You're gonna want to wait here. You have a lot of price action here. Volume is looking a little, again, it's weird volume today. For a Monday open, this is very weird volume. I would not get too overzealous either which way. If you're looking at, let's check out UVXY. 35. Pretty normal. You're going to want to watch 35 and 40 on UVXY. A lot of OI there, which is pretty normal. Normally, like about a buck or two out has been like where there's the most OI on UVXY. For those of you in the community, you obviously know I trade volatility quite a bit. And for those of you watching live, I do as well. So hopefully, hopefully we'll get into one of those trades as well. But that's what you're going to want to keep an eye on. See if volatility continues to tick up here or if not. VIX has just been on a steady climb. It came down and it's just been a slow climb to the upside. Like I said, if I had to pick sides today, I would not be a bull unless we're pushing over this high. And then, like, honestly, I wouldn't be bullish unless we're cracking this 523.54 area. I wouldn't feel enough confidence to go on the bull side of a trade today specifically. That can change, obviously. But for today specifically, I would not want to be too aggressive to the bull side. Let's see what else we got going on here. So we're going to wait and see. Like I said, as long as it's under 520, it's more than likely a valid put play, a valid bear play to tap my LOI at 518.50. You have to keep in mind when you're playing options, though, especially a 0-day option, you have a lot of things to consider. Obviously, your theta is going to be biting in very quickly, but you also have to consider how your delta is going to be calculated, and Vega as well. And with a higher IV option, you don't want to play around in the mud too much. You don't want to hold it, especially if you're buying BTO options at open. You want to change those things real quick. Unless you're moving in your favor, you want to get in and out real fast because if you wait too long, you could be holding a bag. So you definitely don't want to be doing that. So I would rather sit on the sidelines here and wait and get some more directionality here before I jump into another play, if I jump into another play. Monday mornings, for the people who are in our community, know I don't typically trade very aggressively. You got to let a lot of the weekend price action take place, a lot of the news fallout to happen. And that's not something I particularly like doing on a Monday morning unless it's a prime opportunity. Like that was a pretty decent short on the 520 retest and just waiting. But other than that, I wouldn't push the envelope too hard yet at all. Let's see what else we got going. I want to see what you guys are saying, but I have yet to figure that out. So if you're on YouTube, it looks like I can see what you're saying. I cannot see what you're saying if you're on X, though, unfortunately. But we have 87 viewers so far, so hello to everyone. Thank you for checking out the show, and if you like the show so far, do me a quick favor. Like the stream, share it out, drop a comment, interact. It helps me greatly, and I would heavily appreciate it very much. Alrighty. 9:43 right now, about 13 minutes into the open. We're going to want to watch this low, and I mentioned that to you guys before right here. Essentially the, call it 519.32 for any sort of downside confirmation here. If we're not breaking that 519.32, we're not going to push to the 518.50, and you'll back test that 520 area. So it's something you don't want to be too aggressive. You're in a tiny bit of a tighter chop zone here of about 50 cents, $1.50, something like that. Nothing too crazy. All right, trying to tap that low here. I'll go over some popular names as well once I just want to see if we're gonna break this low and go to that 518.50 or not. But I'll flip through some popular names. I know some people asked about Hims, Celsius, and Hood, Robin Hood, and Bull. So we'll go through a few names here in a moment. I'll highlight a few names that I think could have some near-term opportunity as well. And don't forget, at around 10:15, 10:30, I got that diamond in the rough, which actually, this stock is not even in the rough. It is actually a well-performing stock despite the market right now. And I strongly believe it is poised to at least 3x its current market cap from where it is right now. If you follow me on X, which is at Atomcash, ATOMCASH, you already know what it is. I sent out a tweet about it this weekend. But we'll talk about it a little bit more in depth. So you saw that break of that level I listed, that 519.32, wicked below and came back up. So you're going to want to see bulls close above this. This is basically the bulls' last stand here on a very, 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 very short-term time frame. I am going to need to drink this seltzer if I'm going to continue talking for another hour. Snap, crackle, pop, Rice Krispies. Alrighty. Whew. You know, this is kind of anticlimactic. I want to keep the energy alive and everything, and watching little tiny moves, not too helpful. Hey, I can see the chat on YouTube, so that's good. So if you want to talk to me, apparently hop over to YouTube if you're on any other platform right now. It should be listed in all my socials. It's just at Atomcash. I can see the chat. Martin asks thoughts on meta. I will get to that momentarily, Martin. Appreciate the comment. Looking to break the low here. So we broke that low and you had a little bit of a follow through here. You're going to want to watch the volume. Not a lot of volume on the follow through here, so you're going to want to watch that 519. I think there's a high probability we're going to tap my 518.50 and see what happens at that point in time. Martin, if I don't mind asking, you're looking at meta on a short-term day trade, swing trade. What are we looking at here for meta? I'll give a peek right now. I'm assuming it's down. Yup. I was going to say, I'm assuming it's down because we saw tech was down as a whole sector. Actually, meta been hammered lately. All-time high at 740.25. Now trading 488. Wowee. So it kind of depends. If you're looking at it more short-term, more long-term, that would change my answer to your question. Actually, just looking at a glance here on the weekly, right here is an important level. Literally right here, like this 486 area on the weekly is a very important level. Interesting. Swing trade. Okay. I would preface by saying that, like, before saying anything about like swinging in general, I'd be very careful with a swing trade lately unless you know a few things. You know what you're doing with options, obviously, and your time horizon. You're going to want to obviously understand the Greeks, so I'm assuming you understand the Greeks, but depending on your time horizon, you're going to want to be very careful. I think it's very alluring for a lot of traders to buy into shorter term options right now. Shorter term options because they tend to be cheaper, obviously, but because volatility is so high, a lot of those shorter term options are actually overpriced. I had in the Discord, I sold a put. I sold a put on Hood for $4, and it was only like a 6 DTE, and it was fairly close to the money too, and expired worthless, or pretty close to worthless. So there are opportunities where STOing options actually might be a better option for you. Obviously, Meta is a very expensive stock, so having 100 shares of that could be a lot of risk if you're looking to STO options on it. Yeah, even for this week, you're looking at, I mean, you're going to get a decent amount of premium, but you're putting a lot of money on the line to do that. But looking out a little bit more, let's just say you're looking to swing a month out, right? And realistically, you want to be probably like a 50 delta, 48 delta. So you're talking about $2,500 a contract. Now, personally, I prefer, like, if I'm going to do that, there's one or two options. I prefer spending less money on options because it gives me more opportunity to scale. So instead of buying an option for $2,500, maybe I buy 25 $1 options. Now, obviously, that has more risk because you're buying cheaper options. So there's a few different ways you could do that. You could do it with a call debit spread. You could do it with a put credit spread. Other ways you can get similar exposure but lower your cost basis. So that would be something I would look into specifically on Meta, and specifically if you're looking to trade any sort of tech company right now, just because the volatility is so much higher, specifically in tech. I mean, look at the fall that we've seen on Meta alone. What is this? Let's see. It is a 34% fall from high, so it's pretty decent. Obviously, it's attractive. There's an opportunity there, but you are under all your moving averages. You're in a questionable time for most stocks, but I like the idea of looking at Meta and Google over like an Amazon, because a Meta and a Google, and just saying, for example, have less exposure to what the big bear catalyst is, which is tariffs. We're scared of tariffs, right? Meta, obviously, they ship like Oculus and stuff, so there is some exposure there. But if you're looking at more like SaaS companies, for example, they have a less exposure to these kinds of things. So it's not, the tariffs obviously would affect them, but not as much. So I like the idea from that point of view. I would prefer, especially on a company like Meta, me personally, going commons and doing a common swing. So even if, here, let's do like a quick risk analysis for you. let's go and do a long position. Now let's pretend you took a long today. Let's pretend you are willing to risk, let's say the low of this candle, which is 412.99. So we'll do 412.99 on the low. And let's just consider more of a conservative gain here. 633.88 to the upside. And let's see what your risk looks like. 633.88. You entered today. Maybe. It's all just random speculation, right? Nothing I'm saying is financial advice. So your risk to reward ratio is about 1-to-1. So it's not, it's almost like 1-to-2. So your risk to reward ratio is pretty good to the bull side. If you're risking about a 15% drawdown for a 23% gain to the upside, and this is on commons. Those are the kind of opportunities I like in a bear market, and I like in these higher volatility environments where you can get these high quality stocks when they've been drawn down, when they're on discount versus options. So it's not that your mentality could be wrong. It's just that, especially with swinging, depending on your time frame and how much you know about options, that might be a little bit of something you want to consider to your risk profile. That's why I would prefer doing some level of a spread, especially on a company like Meta that can move very quickly overnight, right? You're going to have some volatility, especially going through ERs. Remember, we have big tech ERs coming up. So that's going to be a big effect, even if it's not them. Even this week, Google could say something that helps Meta or hurts Meta, right? So these are real risks you have to consider in your risk analysis, and depending on your exposure, that could be good or bad. Now, with at least commons, you have a very strict exposure. You could say, I want to stop here. I want to take profit here. Or with a spread, you have defined risk to reward. You could do a call debit spread and understand that you're risking 50 cents and you could make $1.50 on the trade, right? So having that defined risk, I think, would be a better idea versus just doing like a straight swing, like when you're just buying direct calls or direct puts, especially in this environment. So a few things to consider. Thank you for the question. Just so you guys know, that's what I like to do with our options operation, which is the next segment, but I guess we'll throw it in here. It's you guys ask questions. I can give you real, like, live, not advice, things to consider from a risk profile standpoint. And that's where I think a lot of the value comes in to a show like the Atomcash angle, where it's not just me sitting here looking at the chart going, oh, I'm going to take profit here, I'm going to sell here, or whatever. It's actual real things that you guys can learn and listen and actually apply to your trading. It's not just me telling you what I'm doing. It's me actually trying to help educate you, but at the same time, not bore you out of your freaking mind. So there's a balance there. Thank you. Great detail analysis. Helped tremendously. You're welcome, man. Hopefully you make some money and come back. If you end up, whatever you want to do, I want to know what happens. If it works out good, if it works out bad, we can always learn both ways. So I'm happy to help, Martin, and hopefully, good luck on that trade if you decide to take that trade in general. Checking back in on SPY, and we are near my LOI here. Low of the day on SPY, 518.58. So anytime you see an LOI, guys, this is what we have in exclusive trading. It's called a level of interest. These are levels based on fib retracements, volume, and honestly what I call a hunch, which is just experience in doing this for a while, where you see a lot of activity at certain price levels, whether it's on the weekly, the yearly, the daily. So these are important levels you want to keep an eye on. Now, it doesn't necessarily mean that there's going to be a bounce, but there are levels in which, well, a bounce in this case because we're coming down, but there are levels in which you want to keep an eye on your chart because there could be a reaction there. Typically, when we see a level of interest tap, you get some, in this case, it's like a support. However, if you get that breakthrough, depending on the volume, that could be a short sign, or if the volume is low and you break, that could be a sign that you want to consider a long. So there's a case both ways here. Now, for me personally, I am really not liking the volume today. It is only 9:55 and our 1 minute volume. So my, like, a nice rule of thumb, and feel free to throw this into your own trading because I think it's very, very helpful, at least for me. If you're a day trader, per 1 minute, you want to look at about 100K on the SPY per minute, roughly. And per 5 minute, if you want to look at that to make it a little easier, 500K volume. If you're under that, you're entering an area where liquidity could be a little light. Now, there's nothing wrong with trading with lower volume, but you do, again, what we focus on the show, have to adjust your risk appropriately. Meaning, you have to understand that in lower volume conditions, it doesn't mean it's more bullish or more bearish. It means it's more risky. Meaning, there are fewer market participants. If there are fewer market participants, big moves can be exaggerated or nothing can happen at all. So especially as an options trader, that can be really good or really bad for you. Either way, it's assigned to withdraw your funds, your capital at risk because it could be more detrimental, or you could get a more outsized move, but you don't have to risk as much money to the table to make the same amount of gains that you normally make. Currently at this 518.50 level, like I just shortly discussed here, and we're trying to break beneath it. Now, if we do get a pull beneath it, my next LOI is all the way down here at 514.08. Doesn't mean it's going to happen, but it is something to keep an eye on today if we just see the bears pile on. The SPY, just for context, is down 1.5% already on the open, which is not fantastic to start the day. Excuse me, got to keep the vocal cords lubricated and ready to rock. You look at NVIDIA, please. Sure. What are we looking at? You want to look long-term, short-term? Hell, let's just roll into it. Options operation time. The next 15 to 20 minutes. We need some hype. Let's do air horn. Okay. For the next 15 to 20 minutes, we're going to do options operations. So you guys, that's your time to ask questions to me, whether it's you want me to look at a certain stock, if you want to look for certain things to keep an eye out for, if you have questions about risk, volatility, trading in general, whatever it is, hop over to YouTube right now because apparently it's the only live stream I can see, or the live chat I can see, and drop a comment in there, ask questions, and I will be more than happy to take a look at whatever you want to look at within reason. If I ignore you, then it's because I'm going to ignore you because it wasn't a great question. I'll try to format it either way. Anyway, looking at NVIDIA, looking for a long-term trade. NVIDIA, in my opinion, is pretty bearish. Now, people will make fun of me in our chat all the time because I have a hate-hate relationship trading semiconductors. I actually swore off trading options on semiconductors for 2025 because I absolutely sucked eggs at trading semiconductors last year. I have a decent win rate. It's around 90%. I do pretty good, but with semiconductors, it is just consistently just very poor performance. So take what I'm about to say with a grain of salt. And now, to be fair, that's just options. We're talking about just the stock here in general. So NVIDIA, I am concerned about. And I said this back, I did a live stream with StockTwits. It was right around when is this? February? Yeah, around February. And I basically said this 125 area was crucial for NVIDIA. Excuse me. Underneath that 125 area, which you see you got about 3 lines there. Excuse me. Pretty bad. Dangerous. So I know a lot of people obviously are looking at NVIDIA. You probably have it in your portfolio. I think there's going to be more and better opportunity on NVIDIA to consider a long position somewhere south of $80. Now, let me preface that by saying that doesn't mean I'm short NVIDIA. I don't want to bet against one of the biggest companies in the world. But I believe that it's due, which is a popular thing to say online. It's overpriced. It's due for a correction. It is due for a correction. Let's be real. But what I was looking at a few months ago, and this here, let's turn off my drawings here so you guys can see more clearly. And actually, let me change this for a second. Let's do that. Is this better? Hold on. Let's see. Oh, I can't see the live chat. All right, I got to work on that. We'll fix that for next time. Anyway, we'll flip back to this one. Okay. You can see up here, this is the monthly chart. So keep in mind, this is months. Lots of wicks, right? Wick, 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 wick. What do wicks represent on a chart? They tell us, well, went up, sellers slammed them down. We closed lower, right? And you can see anytime we were north around like 135, some level of distribution was going on, some level of selling, some level of bears stepping in, people taking profits. It could be a lot of things. Now, looking at this from the monthly perspective, like I said, this 90, that what I say, 86, that area, 82, 86 area, this 90 level, you got a bit of a volume shelf here. Basically, if we crack this low, with the low of this monthly candle right now, it's 86.62. Getting underneath that, it really would not surprise me to see Nvidia, brace yourself, back in the 60s. I really don't, wouldn't shock me. Now, with that being said, if I was that confident, I would put my money where my mouth is, right? Of course, you'd want to see that. You'd want to see me go balls to the wall and short it with all the money I have. Well, I'm not that confident, so I wouldn't do that. But I can say, if that does happen, I could probably say with at least a 70% certainty that we would see Nvidia trade south of 70, between 70 and 62, in my opinion. And realistically, if things got really bad for whatever reason, seeing it in the 50s, high 50s wouldn't shock me either. Now, with that being said, that would be like the bear mentality, right? The bull mentality here is that we've seen a decent pullback here. We've seen about a 30% haircut on Nvidia, so it is on sale. But with that being said, we would need to look for any sort of bullish reversal, something to excite the bulls here. And we're just not seeing it at this point in time. We're very gappy. We're moving to the downside. We're underneath volume profiles. Hold on one second, guys. My dog is crying. I have to let him out real quick. So hang tight real quick. Hey, when a dog's got to poop, dog's got to poop. Anyway, so before I'm bullish on Nvidia, I would want to see a clean break over 100, plain and simple. It's an obvious psychological level. Right now, you're trading 96.50, so we're not a far cry off of that. But it's an obvious psychological level, and you can even see here from early March. That's March, yeah, March. Wicks bouncing, came back up. You got another little interaction right here from late March, early April. Broke to the downside. Big push back up to try to push it over that 100 again. And every time it's interacting with 100, it seems to get some level of movement, right? Now we're under it, though. So this would be a no play for me, even on the short term. I wouldn't touch Nvidia either which way, unless I'm like day trading it, obviously. But I wouldn't touch it either which way unless we're over 100 or under 86 near term. But breaking under 86, I think it could get a deeper retracement to the downside. Hopefully that helps. So I think, in conclusion, I think Nvidia is going to obviously be around. They're not going anywhere. But with that being said, I think it needs to bleed more before it can... It wouldn't shock me to see it be discounted a lot more than it currently is, which I guess is an easy thing to say now just because it is bearish, but it's better than being the guy who's looking at Nvidia at, over here in $140 screaming that you should short it, and it just still not going down for a few months. Now we've actually had a bear move. We're under the 200. We're under it, basically everything. This earnings up here on 528 is going to be obviously very important. But that could be the catalyst to get that liquidity sweep to the downside. So if earnings are bad or at least perceived bad, right? Perceived bearish. If it gets pulled to the downside, that could be your buying opportunity. So for me personally, how I'd wrap this up with a nice little bow. No play for me. North of 86, south of 100. Wouldn't touch it in that zone. I would personally look for opportunities equity-wise after 528, after the earnings, because one of my favorite sayings I like to say to the people of our community, I'd rather show up to the right house late than to the wrong party, the wrong house at all. Meaning, I would rather pick the right name and be right on the name that I'm picking versus pick the wrong name completely or do the wrong thing completely and be early, right? So I'd rather be late on the right side of the move than early on the wrong side of the move. So that would be my whole summation of Nvidia, at least here, medium term. We have 109 viewers, guys. Thank you for tuning in. If you could do me a quick favor and interact with the stream somehow, wherever you are, Instagram, X, YouTube, whatever, drop a like, drop a comment, drop a share, whatever you can. Greatly appreciate it, especially for the first episode. Helps me out greatly. Lets me know how you guys feel, how you're enjoying the show, if you want certain things in the future. Any feedback is more than welcome, because the goal of the show is to tailor it towards exactly what you guys need and also not make it completely boring. Now, let's go check back in with the SPY real quick, and we broke that 518.50, and now you see what happened in real time. We are now at 516.56. So this is what I was talking about. Hold on, let me get a drink. This is an example of what happens when an LOI breaks. So LOI broke, farted around it for a minute, broke, and just pulled to the downside. Now notice, if I zoom in here, with that break, look at the volume here. This is the 1 minute chart, from 9:59 to 10 o'clock, volume increased while price was going down. So bears are getting more aggressive. There are more people selling or triggering stops, right? But there's more volume as the price is going down. And that's what you want to see with an LOI break in either direction, right? So now there is a realistic possibility that we're going to pull to this 514.08. I don't want to see that, but it is in the realm of possibilities today. I'm just not going to be too aggressive. If I held my short, that would have been at $4.24. So, hey, a win's a win. If you held it, God bless. If you didn't, whatever. You made money either way. The most important thing, and this is what I really like to hammer home, especially with our community, making money is the name of the game. When you focus every single day that you have to make a certain amount of money or a certain gain or whatever, that's where you really get trapped. When you focus on making money week over week and month over month, that's how you have real growth as a trader specifically. The long term is what you want to do, not the short term. If you focus too much on the short term, you get distracted and you lose it all. Don't do that. And let me tell you, that's from experience. I've done that. It's a very easy thing to do. It's human nature to go, oh man, I wish I did that. Or, oh, let me throw everything in this one option. It's very easy to do. And it's an easy trap to fall into. And obviously I wouldn't want any of you guys to fall into that trap. So sharing so you don't make the same mistake that I've made. Thank you. I have too many shares, just not liking it. Yeah. Obviously, depending on your average, going back to the video real quick, depending on your average, you could have a repositioning opportunity. And depending on your time frame, right? If you are 20 years old and you plan on holding it forever, then you more than likely can hold your shares forever and you'll be just fine. Or buy more shares when it's on discount. If you're 65, 70 and you're looking to retire soon, that's a different story where you may want to sell and wait, reposition, It really depends on your outlook and what you want to do. Other options, if you own at least 100 shares, you can always sell a covered call. There's other ways that you can disperse risk and at least help make up the difference in the losses. So selling a covered call is actually one of my favorite things to do when price gets a little bit of a drawdown like this, kind of to protect yourself. Or, if you do want to buy more, you have the ability with more capital, you can sell more puts in order to be able to add more shares on the discount. And then if they don't get assigned, guess what? You at least made free money by selling the puts. So it's a win-win either which way. All right, guys, give me one more second to do another small break to let my dog back in, and then we'll be right back with you. All right, the dog is all good to go. Love the show, by the way. Thank you, man. Appreciate it. Hopefully you come back next time, too. By the way, this show right now doesn't really have a set schedule. I want this show to always be something that's interesting to you guys, entertaining. So I will always put it out in advance. Just make sure you're following me. There will always be at least a day's notice. Intentionally, this show is not going to be every single day. It's not going to be every day where you just come in and it's the same people. It's the same thing. I'm not going to bore you with the same information. That's one thing that our community has enough. There's enough people for you to watch that do that. I don't want to do that. I want to at least bring you guys some fresh information, something new to watch, something new to think about, something thought-provoking. And that's going to be the goal of the show. It's not going to be an everyday show. I want it to be something that you guys can tune into, and then you can always watch on demand too. So just so you know, that's the idea of this show. So there's not going to be a set schedule, but make sure you're following me specifically on X or Twitter. I'll always put out an announcement there at least a day in advance so you guys know. And it will always be recorded right here on YouTube as well, so you guys can watch it on demand. So if you ever miss it, hey, watch it on demand and you catch everything up. And I'll try to put little bookmarks in there so you guys know what to look for. It's 10:10 right now, so we're going to roll into... We got 5 more minutes, so if there's anyone in the chat you want to throw a name out there or anything like that, any questions you have, be more than happy to answer. Otherwise, in about 5 minutes, we're going to roll into Like I said, the segment's called dumpster diving, but this stock is not a dumpster stock, so it's more of like a, I want to say diamond in the rough that's already a diamond, so I don't know what that is. It's a rough diamond that has not been pressed yet. Well, actually, you could argue this is a company, so I'll give you a little preface. This is a company that's been around now for a very long time. It has gone under multiple changes. It has some scandal and had some scandal. However, I think they're uniquely positioned as an anti-recession company in the entertainment industry. Very specific. So we'll get to that in about 5 minutes. I still want to open up the floor for any of you guys that are interested in anything or have any questions as it pertains to whatever you guys want to know. You know, if you have any questions about volatility, options, SPY, whatever it is, that's the point of options operation, this little segment where you guys can ask me whatever you want to know. And I'll be more than happy to field the questions. I do want to hover over HIMS, Celsius, and Celsius, and Hood. Because I know I got a few, man, who spells HIMS with an E? There we go. HIMS, Celsius, and Hood. We'll look at those. I'll probably filter. And then we'll go into our last segment, and I'll set you all free for the day. So looking at HIMS right now, down 5%. This is a company that has been hot on social media. People love this company. And there's nothing wrong with that. But anytime there is a lot of retail hype, you're going to want to be careful. Now, looking at him specifically, you're sitting on the 200 MA on the daily. So if you were someone like me who was relatively patient on this name, now's the time where you may want to consider looking at this for a longer term play here. Currently, your POC, so it's your point of control, is at 28.35. You are underneath that with your 200 MA at 26.55. So you are technically underneath both, which does tend to lean more bearish. But you do have earnings coming up as well. So depending on your risk to reward here, you might actually have an interesting play. Even on shares alone, this is why I like this name. Even on shares alone, if you're willing to risk a drawdown to like 21 bucks. Here, let's do a little risk analysis right now. So we'll do 21 bucks to the downside. We'll keep it nice and even. Say 21. Let's say you entered today at 26. Keep even numbers. And I mean, I really like this gap that we left up here, but realistically, I'd probably want my first, so I'm going to be a little conservative. I want my first take profit around, I'll say 36. Again, keep numbers whole and even. So profit 36. Your risk to rewards and even 1 to 2 risk to rewards. So you're risking about a 19% drawdown for a 38% upside. Pretty decent risk to reward. And again, that's a conservative outlook that I have for at least an upside reversal here to that like 36 area. Past that 36 area, I mean, you got some air up here where it could catch some air again. I don't think it's going to get there that quickly, but gaps always have to fill at some point. So that gap fill all the way up here. So let's pretend we fill. That is a 59.60. So let's see what that risk to return would be. So if we fill the gap at 59.60 eventually, you have a 6.7 to 1 risk to reward. Those are the trades I like. I'm risking a 19% drawdown for a 130% gain. Now, I'm not saying on options, this is shares, right? So if you like HIMS, if you know a lot about the company, something that interests you, something you may want to consider here. I like the idea of equity, especially due to the fact of where it's sitting. It might fart around here a bit. And with earnings coming up, it could get a bit of a drawdown, obviously depending on how earnings go. And we have that threat with Amazon right now, specifically with him. So it could, there's always a risk to the downside. It could get a little bit more of a retracement. So that's why I wouldn't be super confident on an options play on him. But, hey, a 19% drawdown for 130% risk, in totality, pretty solid. Not to mention if you have enough money to sell puts on it or acquire shares and sell covered calls as time goes on, you can reduce your cost basis that way. So there is a few different ways you can play this. I do like where it's sitting around the 200 and around this point of control here on the daily, obviously depending on where you move the chart. But you do have a lot of volume down here too. So this is definitely an area of consolidation. Bears are going to argue that you're going to make some level of a giant head and shoulders, which they're not necessarily wrong. that you could have a giant kind of head and shoulders forming out here where it could pop back again to that 36-ish area, 35, 36, complete a right shoulder, and then move to the downside. So there is that real risk there as well. So maybe considering this name with a long, and then consider moving a stop loss as you go if you like the name in general. Obviously, it depends on your outlook. Next, Celsius. This is a company I love. I've been bullish on it for a while now, and now I'm green on shares, thank God. Currently sitting around 36 bucks. I really like this company because they don't really have debt. Now, they are going to have debt, but they were sitting on a pile of $1 billion. What they decided to do with that $1 billion is acquire Alani Nu, which, pretty good acquisition. The one area that Celsius has been failing, their U.S. market share is shrinking a little bit, and they don't really have much attraction with the female audience, female demographic. With the acquisition of Alani Nu, that allows them to pull in a brand new demographic, which is fantastic because they don't have that pull yet. So now they're tackling more than one market, and that's already a built-in customer base. If you don't know about Alani Nu, my wife does. So those are the kind of things I look for. I look for other people drinking them in the gym or whatever, right? And I see that. So I know, and these are women who are drinking these beverages specifically. So I really, really like the acquisition of Alani Nu. They're not going to have to take on a lot of debt theoretically to pull in this acquisition. Like I said, they're sitting on $1 billion. Plus, they still have the deal with Pepsi for distribution. I'm very bullish on Celsius. I think it's still undervalued. I've been saying it's undervalued. And I am very speculative that Pepsi will actually acquire them one day. Now, in our community on the Discord, I have called 3 for 3 on acquisitions or going private, right? I don't say that lightly. If I say something is a buyout target or if I say something is potential acquisition, I'm very confident in saying that. I wouldn't say that if I didn't think there was a realistic ability there. And even though this is trading at $36, you guys always have to keep in mind the market cap of companies. So this company right now, where's my market cap? It's a $9 billion company trading at 36 bucks. Pepsi can afford it. Like, let's be real. Pepsi can drop 10 billion and buy this company, or, a little bit more, obviously. It is a realistic acquisition target, in my opinion, especially if they're acquiring other brands in the lifestyle, like gym brands, right? I think Celsius is actually going to be an arm of Pepsi one day, because Pepsi does already have that built in with Powerade. I think it's Pepsi, right? Powerade Gator, whatever. They have a sports line, right? But they're not missing people like me who are like, who work out, who actively do fitness. We don't necessarily drink Gatorade or Powerade, right? You might, but whatever. But you are drinking energy drinks, or you're doing more lifestyle brand things, protein shakes, whatever. This is their step into that market, where Pepsi, especially if Celsius builds out like a protein band, if they start putting out like protein bars and whatnot, I think Celsius will get acquired by Pepsi really quickly. Obviously, Pepsi already has the distribution there as well for like Frito-Lay products, or snack products as well. I really, really like Celsius as a potential acquisition target. If you're bullish on Celsius, I don't think you're wrong. Obviously, you want to make smart decisions with the shares that you have, but make smart buying decisions in general. But I really like Celsius longer term. Lastly is Hood, another hot retail stock. I don't love it. I'll say it. I don't love it. I don't love Hood. It's okay. It's whatever, right? It's a stock. It's a stock. I think there's too much hype. I like what they're doing. I like how they're leaning more towards other areas of finance where they're now going into like banking and whatnot. I do think it's overvalued right now. I think it's a growth stock, and I think growth names get hurt in this environment. And I think Hood's going to be one of these names that a lot of people are going to get hurt on. That sounded funny. It reminds me of, specifically, not related, but reminds me of Snapchat, and I'll tell you why. It reminds me of this, where people got really, really hyped on Snapchat, and this is a monthly chart, by the way. People got excited. People thought Snapchat was the next big thing, going to the moon. It went to the moon. However, it crashed back to Earth and then decided to go to hell on top of it. Now, I don't think Hood's going to get as deep of a retracement. I mean, Snap went to 83 and lost 90% of its value. I don't think that's the case for Hood. I do think that, especially if we're under this 3360, right? This is the monthly chart, by the way. You could have a big old cup and handle-ish kind of thing. It's kind of not necessarily that right now. on the monthly chart, but nice cup handle-ish kind of move here. If we stay under this 3360, I do think Hood gets drawn all the way back to like the 20s. So I do think there's an opportunity for a 50% haircut. At that price, I think Hood is a very good buy. But at this price, I don't think it is. I don't think the risk to reward, I should say, I don't think is there at this price. Give me a 50% haircut. I think Hood is a very good name to keep your eyes on at a lower price. Now, with that being said, that is a perfect segue into the last segment, which is going to be, again, normally it's the dumpster diving segment. This is not a dumpster stock, so because it's not beat up, but it is actually going to be a company that many of you may know and many of you may not have ever heard of, and that is the TKO Group. So for those of you that don't know, TKO is the WWE and UFC together, owned by Endeavor under this TKO brand on trading on the NYSE. Now, TKO as a company, I love. I think right now where it's trading is at a, $25 billion market cap. I think this company is a $100 billion market cap company one day. Cleanly over $500. Hear me out. Specifically what I'm seeing on the WWE side of things is that WWE is actually trying to acquire other wrestling promotions across the world. Consequently, they're doing, for those of you that know wrestling, they used to have the NWA, the National Wrestling Alliance, where there were different territories across the United States. And they would all run their independent promotions, but they would all kick money back to the NWA. I think that's a business model that WWE is looking to do. They just acquired AAA, which is one of the biggest wrestling promotions in Mexico. And there's rumors that they might acquire New Japan Pro Wrestling, which is another one of the biggest pro wrestling businesses in Japan. Once they start acquiring these companies outside of the United States, they now open themselves up to so many different things. Distribution on television for advertising, whole nother markets to sell more products to people, shirts, t-shirts, etc. There is a lot of opportunity there for this kind of market share to be out there and absorbed by the public, essentially. Oh, hold on. Do I have an error here? Stream is disconnected. Uh-oh. Can we see me? Hold on, guys. Did we disconnect? No, we didn't disconnect. I don't think so. For this kind of market share to be out there. All right. Sorry about that. It says I disconnected, but it looks like we're still good. Anyway. So yeah, TKO Group. What you're seeing as well, again, on the WWE side of things, I will talk about UFC, they're advertising a lot. They never used to put ads in the ring specifically. WrestleMania was this weekend. Even if you skim that or saw clips on YouTube or X, whatever, every single match was sponsored. They're really hamming it up with the advertising. Thank you guys for letting me know I'm connected. They're hamming it up with the advertising a lot. And that is something where I think they're going to be making a lot of money, specifically in the advertising. Now, if they have these advertising deals and now they're also spreading their distribution worldwide and now they have ownership over these different territories, the possibilities are endless. Like, they really are. They have a good product now as well. Again, on the WWE side of things, where the product is very hot. People think wrestling is cool again, which is great. You're seeing more people talk about it, which is something that I haven't personally seen until back in like 2000s. And then before that, the Attitude Era, for those of you that know wrestling. So wrestling is kind of cool again. Now, couple that with the UFC. UFC has been cool, right? People like the UFC, and I think combat sports is the same kind of realm. Now, think of this. For those of you that watch things on X or whatever, I'm sure you've seen fighting videos, other MMA videos. There are other promotions across the world. The same exact business plan here is set up for Dana White and the UFC, where they can acquire other brands in other countries and run promotions underneath the UFC umbrella. And honestly, these brands want to be acquired by the WWE. They want to be acquired by UFC. They want to have that branding because they know that branding is more power and more money to them. Even if they have a little bit of ownership, they get some stock out of the deal, whatever, that's more money in everyone's pocket. So for that reason alone. And it's a very speculative reason. I'm very confident that the TKO group, which is trading at all-time highs right now, right? It is drawn down a little bit. Look at the daily here. 178.61 was all-time high. You do have a little bit of a retracement here, but I want you also to understand that this retracement here really isn't that bad. It is currently 18% off the high, so similar to the market pullback, but it's not like some other stocks that have gotten completely demolished, right? I think they have a firm business. I don't think they're going anywhere. Even if we hit a horrible recession, tariffs don't affect this company with the exception of merchandising, obviously, but their bread and butter is advertising and their bread and butter is streaming. So WWE signed a deal with Netflix. This is the last piece here on my bull case. WWE signed a deal with Netflix, which opens the door to the UFC signing a deal with Netflix. Getting out of the pay-per-view business model and moving into a streaming business model, not only is going to be more money for the UFC, but it's going to be more viewers. When there's more viewers, what do? They buy more product because more people are familiar with the product. They buy more things. They watch more shows. They consume more. And we are in the business of content and consuming. TKO Group, in my opinion, triples from here. I will say it today on April 21st, 2025. I don't know when, but the TKO Group will be at least a $500 company. It would be cleanly over $750 in my opinion, where I think fair value for this company is going to be over $100 billion long term. For your consideration. With that being said, everyone, thank you to all 120 of you. If you enjoyed the stream today, do me one quick favor before you fly out of here. Drop a like, drop a comment, drop a share, follow me. Pleasure talking with some of you. I hope you guys enjoy and come to the next Atomcash angle, which if you don't follow me on X, make sure you go follow me on X. That's where I'll put all the announcements in ahead of time for you guys to watch. And all the segments and stuff, because every time we do a show, it's going to be something like this, where I talk about the TKO group, or we do options operation. It's always going to be something new. It's not going to be me staring at a chart going long here. I'm long 20 contracts. I'm trimming 5 contracts. No. It's going to be something that is giving you value. Yes, we might do a live trade. I did a live trade with you guys with a little 15% trade, but hey, that's cool. But I also want to bring you guys value and things that you can take home with you, right? You can learn from what you see here and you take something positive away every single time you come to the show. On top of that, it is not going to ever be a snore fest. I have this whole soundboard. I didn't get to use it. I even have sad trombone. Didn't even get to use a sad trombone. Really wanted to use that today. So, anyway, that's going to wrap it up for me, guys. Some say you need an edge to trade. Well, I like to look at things from a different angle, and that's what you always get here on the Atomcash angle. Have a great rest of your day, and remember, precision beats prediction every damn time. Take care, guys. I'll see you next time.